Good evening, ladies and gentlemen. I'm Aisha, moderator for this conference. Welcome to the Q2 and H1 FY21 earnings conference call of Tribhovandas Bhimji Zaveri Limited, organized by Dickinson World IR. At this moment, all participants are in listen-only mode. Later, we will conduct a question and answer session. At that time, if you have a question, please press star and 1 on your telephone keypad. Please note, this conference is recorded. I would now like to hand over the floor to Ms. Manasi Bodas. Over to you, madam. Thank you.
Thank you. Good evening, everyone. Let me welcome you all to the earnings call of Tribhovandas Bhimji Zaveri Limited for the second quarter and half year of 2021. Today, we have with us the management represented by Ms. Binaisha Zaveri, Full-Time Director, Mr. Saurabh Banerjee, Chief Finance Officer. Before we get started, I would like to remind you that our remarks today might include forward-looking statements and actual results may differ materially from those contemplated by the forward-looking statements. Any statements that we make on this call today are based on our assumptions as on date, and we undertake no obligation to update these statements as a result of new information or future events. I would now invite Ms. Binaisha to make her opening remarks.
Good evening, everyone. I welcome you all to the earnings call of Tribhovandas Bhimji Zaveri Limited for the second quarter and half-year results of FY 2021. Thank you all for sparing your valuable time in joining us here today. As we all understand, the unprecedented pandemic has altered consumer sentiments and behavior. Despite this period of great uncertainty, we at TBZ have quickly adapted to these changes and have created the right environment for our customers to select and buy jewelry of their choice through various well-thought-out marketing and sales-oriented initiatives, always keeping in mind the safety of our customers and employees be accorded the highest priority. After the nationwide lockdown, which disrupted the first quarter of FY 2021, was gradually lifted, the company was able to gather momentum within a relatively short span of time and received a very positive response from customers during the second quarter, resulting in an encouraging performance that augurs well for the rest of the financial year. We took the frequent upsurge of gold prices in our stride and offered our consumers our unique brand collections at affordable prices that were very well accepted by them. Our overall profitability improved significantly during the second quarter, whilst we continue to drive cost efficiency. Judicious manpower rationalization, measured and effective marketing strategies, rent waivers and concessions negotiated prudently, automation and constant review of operating costs helped to achieve improvement in margins. With a sustained focus on inventory rationalization and strengthening of our cash flows on one hand, and respecting the expectations of our business partners, that is, vendors and suppliers, on the other hand, the company has been able to strengthen its balance sheet. The company constantly communicated with customers through numerous campaigns with the use of influencer marketing strategies to allay their fears around store visits and encourage them to plan their visits via appointments and video interactions. Use of digital brochures, video shopping, and offering a completely digital Kalpavruksha, that is our jewelry purchasing plan, resulted in greater revenue opportunities being created and realized. Consumer sentiments have improved during the ongoing festive season, which shall help to deliver a strong performance during the rest of the financial year. Our approach on focusing on consumer-friendly tech interventions, attractive jewelry buying options, and a well-trained and motivated sales team has led to TBZ being able to take advantage of the pent-up demand as well as reach out to a larger customer base, both physically as well as digitally. Before we open the floor for questions and answers, I would like to wish everyone a very happy and prosperous Diwali. With this, I would now like to hand over the call to our CFO, Mr. Saurabh Banerjee, for a quick overview of our financial performance during the quarter. Thank you.
Good evening, everybody. First, I will take you through the key highlights of quarter two and the first half of this financial year. I'll first read out the numbers for Q2 FY21 vis-a-vis Q2 FY20, and then I shall read out the H1 number. Total income from operation 273.17 crores vis-a-vis 393.2 crores for the previous quarter last year, a drop of around 31%. Gross profit in absolute value 58.1 crores vis-a-vis 54.5 crores, an improvement of 6.61%. Gross margin, these are blended margin, 21.27% vis-a-vis 13.86. EBITDA 40.9 crores vis-a-vis 21.82. EBITDA margin 14.97% vis-a-vis 5.55. PBT 22.08 crores vis-a-vis 1.29 crores. PBT margin 8.08 vis-a-vis 0.33. PAT 14.15 crores vis-a-vis 0.89 crores. PAT margin 5.18% vis-a-vis 0.23. For the H1, the total income from operations are at 352.63 crores vis-a-vis 822.97, a drop of around 57%. Gross profit at 66.79 vis-a-vis 120.41, a drop of around 44%.
We would request the participants to please stay connected as the line for the management has gotten disconnected. Thank you for patiently waiting. We have the management reconnected. Mr. Saurav Banerjee, you can please go ahead.
Thank you. I'm sorry I got disconnected. I was mentioning about the gross margins at 18.94% vis-a-vis 14.63. EBITDA at 32.54 crores vis-a-vis 47.45 crores. EBITDA margin 9.23 vis-a-vis 5.77%. PBT at minus of 3.69 vis-a-vis 6.24. PBT margins minus, and then PAT at a minus of 5 crores vis-a-vis a positive of 3.96 crores. So these are the summary numbers. We can now go ahead with the Q&A session.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their telephone keypad and wait for your turn to ask a question. If you would like to withdraw your request, you may do so by pressing star and 2 again. First question is from the line of Harsh Shah, an individual investor. Please go ahead.
Thank you for the opportunity. When you mentioned about the inventory rationalization in the presentation, so is it jewelry inventory or our own gold inventory?
This is jewelry inventory. So when we talk about inventory for the company, it comprises of all inventory, which is gold or diamond, platinum, jarrao. So all these things are included in the inventory. And when we talk about rationalization of the same, then we are talking about all the inventory that we have.
Okay. And as you mentioned that the company has not adopted any new gold on loan. So what does it mean? If you can just specify that.
Yes. So normally when we procure gold, when the gold inventory is procured, then normally the company procures it through the gold on loan model, which is available from the various banks in the consortium. In this case, what we meant is that the gold that we have been able to sell by way of jewelry, wherever we have felt that replenishment of that gold was not required because we wanted to keep the inventory at a reasonably lower level and ensure that it meets the kind of demand that is prevalent in the marketplace. So to match the demand and the inventory that is there in the company, we have taken a step of not procuring gold inventory through the gold on loan model and doing it only to the extent required for the day-to-day selling to happen. So the inventory levels at the stores have been maintained at an adequate level for the customers to select their jewelry. The range of inventory is there for them to choose from. But anything that we thought that was in excess or was slow moving and then which was sold off was not replaced in a great hurry. And that is how the gold loan, the inventory procurement through the gold loan has been kept at the minimum level required.
Okay, thanks. That was helpful. And just one last question. What will be the normal course of our inventory turnover going forward?
Normally, in let's say a steady state situation, the inventory turns as far as gold is concerned is anything between 2.5 to 3 times for the company. And for diamond, it is around 1.1, 1.2 in that range. So going forward, we should get back to those levels. And in fact, we are expecting that those inventory turns will start improving further because there is a pent-up demand in the marketplace. A lot of customers would like to buy jewelry for either their personal occasions like weddings or any other festive occasions or important occasions in their family, as well as the festivities that we keep on having in India. So we expect that we should be able to do better inventory turns going forward.
Okay, that was helpful. Thank you, team, and wish you all a happy Diwali and prosperous New Year. Thanks.
Thank you so much. Wish you the same.
Yeah.
Thank you. The next question is from the line of Hitendra Chawla, an individual investor. Please go ahead.
Hello, sir. Thanks for the opportunity. I just want to know your margins this quarter are up because some of your inventory or large part of your inventory would be valued at a lower price since that's the way inventory is valued. So these gains in margins for how long or what kind of impact you can see in the coming quarters? That's question number one. Number two, now with the marriage season going on and a lot of weddings which were kind of postponed or held back are now happening, even though with a smaller kind of gatherings, but still there is anecdotal evidence that families are still buying jewelry for these weddings. So what kind of impact do you see on the business going forward compared to previous years? What kind of footfall and sales do you expect this quarter and next?
Yeah, sure. So to answer your question on margin, yes, it is true that the margins are definitely, relatively much higher than what they normally are. And the gold price impact is there, which is a decisive factor to determine margin. But it's not just gold price, it is also the product mix. And we have been able to maintain a very healthy product mix between gold and diamond. That also contributes to the overall blended margin. Going forward in this financial year, we are of the view that for some more time these high prices or for gold will sustain itself and probably may not be really increasing or galloping away. At the same time, we should be seeing higher gold prices in the short term kind of a situation. What happens thereafter remains to be seen because as we know, gold is a very volatile commodity. It is easily impacted by any world event, anything that happens anywhere in the world. and it has an impact on gold. So it's difficult to really guess or even be fairly sure of what's going to happen. But even as a steady state, we have been earning blended margins of around 15% earlier, and we expect that going forward in this financial year, we should be able to keep the GP margins at around 17-18%, anything between 17 to 18% perhaps. Going forward, it is possible that it may come down to a certain extent. This is as far as margin is concerned. As far as demand is concerned, you mentioned about weddings and various other occasions. We have seen quite a spurt in demand. In fact, as the days go by, with each passing day, the footfalls as well as the eyeballs or the digital interactions that we have on the online platforms have increased substantially. Customers have been coming out and buying jewelry, which was sort of pent up. Lots of weddings, as you said, were postponed, cancelled, and which have been sort of reinstated, or they're happening now, or they're going to happen in the forthcoming days. That, coupled with the big festive seasons, the lead up to Dussehra itself, and again the lead up to Dhanteras and Diwali, which is just around the corner, that has ensured quite an increase in demand, which we have seen in terms of whether it's footfall or whether it's conversion into actual revenue. That is very visible, and we are pretty sure that the trend will continue for the rest of the financial year.
Okay, sir, but compared to last year, what percentage we would be in terms of revenues, or what do you expect in this quarter and next?
Yeah, sure. So if we were to consider the entire financial year, suppose we consider 2021 the entire financial year, then as we are all aware that we lost almost the entire quarter one. So quarter one, as we have explained earlier, it was effectively just for 15 odd days. The stores started reopening in the month of June. By the time they actually reopened and settled down, and all the local restrictions were lifted by the government, state governments and the local authorities, the quarter one was almost over. So we effectively got just 15 days. So the loss of revenues in quarter one cannot be really replaced because that is gone. And hence there always will be a shortfall. If I were to compare with the last financial year, there will be that shortfall. But otherwise, I think the situation has started improving quite a bit. We do not expect to be anywhere near the last year numbers. But
I actually meant more of quarterly numbers rather than full on year.
Quarterly numbers, as you can see in this quarter, if I were to compare with last quarter, quarter two of last year, the numbers are down by about 30-31%, and for the half year it is down by 57%. Now, it will be very difficult or almost impossible to make up these numbers. But going forward for quarter three and for quarter four, we expect to be somewhere close to the numbers that we achieved last year. We have seen that in October itself, the numbers have been very encouraging. We have done very well in the month of October. November again is likely to be a fairly robust month for us. And after that, December to March should be some kind of a normal scenario. I'm not saying 100% normal, but close to normal. Near normalcy is what we have said.
And if I may ask, the high margins that you got because of lower inventory cost, the same margins are also expected in this quarter and next?
Yes. So if October, again, I will refer to October. If October is a good indication, then we have recorded pretty high margins in October as well. Going forward, naturally, there will be some kind of dip in the margins. The dip will be gradual. But as I said, that since the margins are already very high, even some small dip will still keep it much higher than what we used to earn earlier.
Okay. And sir, sorry, I'm taking a bit more time, but just want to understand in the industry, one doesn't know industry level data, but in terms of market share, is there some sort of a gain or from smaller jewelers who may not be operating at your scale? Is there some trend where, other industries are seeing some consolidation? Is there any evidence of such a thing happening in this industry as well?
Yes, very true. Consolidation is definitely happening, and the organized sector is definitely gaining market share. The mom and pop stores were already, I would say, finding some kind of difficulty or strife in operating as they used to do earlier. So even before the COVID-19 appeared on the scene and lockdowns and other store closures happened, there was a definite indication that mom and pop shops or single stores were finding it difficult to continue the manner in which they were earlier operating. So it's not that it has happened just in the last few months, but it has been happening for, I would say, at least 1.5 years now. It's a gradual process. It cannot happen overnight. But what has happened is that the whole thing has got hastened because of the unfortunate COVID incident and the resultant lockdown. So mom and pop stores are finding it difficult to operate in the manner in which they used to earlier. And market share has definitely shifted to the bigger and the more organized player. And it's not just because of these impediments, but also the customers and the consumer trend is more aligned towards branded, jewelry. I think there's a clear shift where customers want to enjoy or want to avail or want to wear jewelry which is from the bigger names which are branded. And this trend is clearly visible in the smaller towns, the relatively smaller towns, because the aspirations of those customers have come to the forefront, and they are now, willing and ready to, experience the bigger brands, the more well-known brands, and also because of the reach. So most of the organized companies like TBZ or any other, they have been able to reach out to these markets which were hitherto slightly probably out of the reach or maybe not having enough focus. So that is also one of the reasons. So it's not just mom and pop shops that is there, of course, but in a very different way, the consumer sentiment, the market behavior, the customer's choice and preference, everything has ensured that the organized sector has gained a substantial share.
Thank you. Hitendra, we would request you to please come back in the question queue for any follow-up questions, as we have several participants waiting for their turn. The next question is from the line of Ronak Kataria from Growth Financial Solutions. Please go ahead.
Hi, good evening, everyone. So I have a couple of questions. Firstly, just wanted to ask, have they shut down any stores during this quarter? If yes, how many and in which location? And secondly, what is your sales mix and breakup between your gold jewelry and gold coins?
Yeah, sure. So in terms of store closure, yes, we have closed 2 stores. One was Jamnagar in Gujarat, which was originally a franchisee store, and it was a very small store, and because of personal reasons, family reasons, the store had to be closed down. That was at the franchisee end. And the other store that we have closed down is Aun in Pune. So we do have stores in Pune. Other stores are operating in Pune, and we decided to close down this one store in Pune. So these are the 2 stores that we have closed down in this quarter. Sorry, what was your next question? The share.
Yes, the sales mix of between gold coins and your gold jewelry.
Yeah. So, gold is actually categorized a little more, I would say, in further buckets as well. So we have gold coin, we have plain gold jewelry, and we have studded gold jewelry. And gold coin share is the lowest one. It will be in the range of about 4 to 5, maximum 6%. Plain gold jewelry in this quarter, which is quarter 2, has had the highest share in terms of sales or in terms of, the demand from the customers, which is about 70-odd%, 65 to 70%. And the balance is the studded gold jewelry. So this is the breakup.
Okay. Yeah. Yeah. That's all from my side. Happy Diwali and a prosperous New Year. Thank you.
Thank you. Same to you.
Thank you. We would request the participants to please press star and one to ask a question. The next question is from the line of Minat Sabnish from Sabnish Financial. Please go ahead.
Hello.
Mr. Sabnish, your line is in talk mode. You can go ahead, please.
Hello.
As there is no response from the current participant, I have muted the line. We would request the participants to please press star and one to ask a question. The next question is from the line of Roshni Devi from Cogensis Information Services. Please go ahead.
Yeah, I just want to ask, has the share of plain gold jewelry increased from last year? Because you said it's 65 to 70% now. So how much was it during Q2 and H1 last year?
Yeah, yes, it has increased to a certain extent. Last year, the share was lower at about 50-55%. This year, we have seen, particularly in Q2, we have seen a greater demand for plain gold jewelry, and it has, as I mentioned, it's hovering around 70-odd%.
Okay. Has there been any similar change in the pattern for gold coins?
Gold coins, no. Gold coins, once upon a time, about several years back, the gold coin percentage used to be higher at about double digit, 10-11%. But later on, we have seen a shift in consumer, pattern of buying, and also the mindset that earlier, people used to buy gold coins from an investment point of view, not really from a jewelry, point of view. But the last few years have clearly shown us that consumers or customers are more interested in buying jewelry for the purposes of buying and wearing jewelry. So the purpose is very well defined in their mind. It's I would say, a purpose-oriented mindset rather than an investment-oriented mindset. And one can understand that and appreciate, because after all, it's gold jewelry. So if one were to invest, whether it's gold or gold jewelry, it's one and the same thing. It's priced at the same, level. So why not wear it, and why not, use it, wear it, feel happy about it, and at the same time retain it. So that's the shift that we have clearly seen. So that is why the purchase of gold coins percentage has dropped from around 9-10% to somewhere around 4 to 6%.
Okay. Yeah. Thank you.
Thank you. The next question is from the line of Ilesh Kopani from Kopani Securities. Please go ahead.
Yeah, thank you for the opportunity, sir. And my question is, what is the net?
Sorry to interrupt. Ma'am, I would request you to speak a little louder, please. We are not able to hear you.
Yeah, can you hear me now?
No,
Yeah,
ma'am.
yes.
It's still
Yes,
the
yes.
same.
Yeah. So, hello?
Yeah, yes.
Yeah, what is the net debt of the company as on September 20?
It's around 472 crores.
Okay, and my one more question, sir, is about the controversy going around the brand ambassador of the company. So, has it hurt any sentiment or brand image of the company?
No, ma'am. No.
Thank you, sir.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and one now. The next question is from the line of Minal Sabnis from Sabnis Financial. Please go ahead.
Yeah, hi. Good afternoon, sir. I hope everybody is safe and sound at your place.
Hi.
I have a couple of questions. I think last time on the Q1 call, you mentioned TBZ was thinking of expanding the online platform and gaining more market share or generating more revenue on that front. So what is the update on that? I may have missed the answer if you have already answered this, because I joined the call late.
No problem. No. So let me answer. You've not missed it. First is, yes, we are definitely, I think, much more visible, and there's a concept-focused effort on the online platform. What we have done is primarily two things because the need of the hour was that. One is that, it's been used for communicating effectively and constantly with the customers, giving them assurances that they can continue to buy or they can continue to select or interact with TBZ frontline, the sales team and marketing team, in their efforts to, choose and buy jewelry online. So what we have done is we have established video conferencing facilities, booking appointments through the videos, the online brochures, visiting a store online and having a look at the range of jewelry that we have. And also the communication, which is very important in today's time, that, safety is at the top of the mind of the company, and anybody who wants to visit the store or who wants to buy jewelry is, assured that he or she is completely safe and there's no, there's no chance of getting infected by the virus.
Absolutely.
So that was an important thing which we have achieved and which has been very well appreciated by the customers of TBZ. The other thing that we have done, which again has been fairly successful, is that we have completely automated or the KP process, as we know that we have.
Sorry, what process?
Kalpabrook's scheme of buying jewelry, which is the EMI-based scheme of buying jewelry.
So that can be done online as well?
Yeah, completely online, right from enrolling, paying your EMIs, or looking at your balances, interacting with the frontline team, and also once it matures, then you can select your jewelry online. You can discuss with the store staff, and then you can decide.
Yes, I have a minor doubt on that. If I could just interrupt you.
Yes,
you mentioned that the sales or display of jewelry happens via video call or conferencing. So how does that actually take place? Is it an employee at the store showing the jewelry as if I'm already sitting right in front of him at the store? Or is that there's a special catalog and a special place somewhere where there are only dedicated employees doing only online display?
No, it's not like that. See, we do have a catalog. As I said, there's an online catalog or a brochure which one can browse through. And at the same time, as I said, the stores have been opened from June onwards. The stores are all open, and our employees are there at the stores. They are operating from the stores. So if somebody wants to interact with them, somebody wants to have a look at the jewelry, then that is also possible. So both the things are happening.
Right.
So this is how. Yes.
So that's what I was coming to, because compared to other apparel or any other retail goods, jewelry or gold, silver, diamonds, expensive stuff is a bit more. There's more friction into buying that online, I believe, because सोना हाथ में लेके देखने का feel अलग है ना, sir. You can understand.
Yes.
So
I appreciate.
So I'm really impressed how you're overcoming this hurdle. So my next question is on the similar lines, because if you can overcome that hurdle effectively, that you are able to display gold on screen instead of depending on person traveling to the store and sitting in front of you, then I think that can drive a good cost optimization. I think we've closed 2 stores in this quarter. So would you be open or planning to close a few more stores since this online traction is generating really well, and that it can probably sustain beyond the pandemic scenario? So what are your thoughts on that?
Yeah, sure. While I appreciate your question and also the thoughts that you have shared with us, as you rightly said, that finally, all said and done, the preferred method of buying, as far as the customer is concerned, is to, go through that look and feel kind of an experience and then buy jewelry. We have to remember that, because of certain events that have happened in the recent past, like the pandemic and the virus spreading rapidly and the danger of infection, the company has found a way to deal with it. So there was a problem, there was, something which came up which was a kind of a hurdle, and the company has come out with a solution to overcome that hurdle and give this unique experience to the customers. So that's going to stay, and we shall try and improve upon that, or our outreach on the digital platform will keep on increasing. However, the traditional method of displaying and buying jewelry, where people come with the entire family. For example, if somebody is having a wedding, the tradition in India is that they all come to the store and they sit around, discuss amongst themselves, and then they select whatever jewelry they want to. So it's like a family thing. It's like a team effort which happens. So that has to be respected, and that has to be continued. So when we close a store, we are not closing it because we want to go online. That's not the real reason for closing. We are closing a store because we may be looking at the economics of that store, maybe the dynamics of that store, whether it's really required or whether there's any compelling reason for that store to be closed down, right? So I think those are the real reasons. But it has to be a really good mix. So the traditional, the brick and mortar stores are there and they will remain. And whenever we get an opportunity, we shall definitely expand also on that line. At the same time, TBZ will make its presence.
Just to add something here. So, are we planning on these lines that if the customer cannot come to the store, are we taking the products to the customer so that we have a small skeleton or satellite sales staff who are available on call to take a certain amount of jewelry to the customer's home and they can buy it on the spot themselves?
Yes, we are doing that. We are definitely doing that. That's happening, and that's I would
how's
say.
The response to that?
I think it's been good, and so far, I think we've tried different strategies. They've all worked out very well in our favor. Yeah, thanks.
Okay.
Can we move on to the next question, please?
Yeah.
A reminder to the participants, anyone who wishes to ask a question may press star and 1 now. Participants, to ask a question may press star and 1 now. As there are no further questions, I now hand the conference over to Ms. Manasi Bodus for closing comments.
Thank you everyone for joining us today for this call. In case of any further questions, get in touch with us. Our coordinator provided in the presentation. Thank you.
Ma'am, sorry to interrupt. Your audio was breaking.
Hello.
Thank you. On behalf of Tribhovandas Bhimji Zaveri, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.